Hello, everyone, and thank you for taking the time to review the Morgan Hill market analysis for March 2009. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. Now, if you'd like to see any of my other presentations or listen to my weekly podcast or read any of my articles on real estate, you can find all of those at my website at www.soldbyrobert.com. If you'd prefer to send me an email, please just send those off to robert@soldbyrobert.com. If you'd like to call me by phone, just dial 408-852-0525. If you'd prefer to use AOL Instant Messenger, Google Talk, or Yahoo IM, my screen name is The Rebel Broker. If you're using Skype, the screen name is Rebel Broker. And of course, referrals are always appreciated. If you or anyone you know is interested in buying or selling or investing in real estate in the Silicon Valley area, please feel free to get in touch with me. I'd be happy to help you in any way I can. And also, if you are interested in real estate anywhere in the United States, I can go through the process of finding the agent just for your needs. Just get in touch via any of the methods listed above. Let me know what kind of property you're looking for, what your goal is, and I'll find the perfect agent for you. All right, let's go ahead and jump in and take a look at the supply and demand numbers for Morgan Hill. The first thing we'll see here is inventory. We've actually got some pretty good news for the Morgan Hill market. Now, inventory numbers are down. That is excellent news. They're actually down by quite a bit. They're down 21.41%. That is 70 fewer homes on the market in Morgan Hill than there were at the same time last year. And remember, this is just the month of March going back to 1999. This is not the looking back month to month. This is looking back the same month way back to 1999. So we don't have to worry about compensating for any seasonal influences or those kinds of things. This is just the month of March, and it's a great way to sort of get a feel for where we were at the same time of year in past years. So now you can see obviously where the market started to make its turn in 2005 in Morgan Hill, and we were one of the first communities to get hit by the downturn in the market. And we saw that dramatic increase in inventory right up until 2008, where it peaked out at over 300 homes on the market. Now we have 257 homes on the market in Morgan Hill right now. That's not where we'd like it to be, but at least it is lower than it has been. Now let's go ahead and take a look at new listings. These are the number of homes that were added to the marketplace in this month. And if you can see, we've had steady decreases year to year since 2006. That's actually relatively good news. It just wasn't enough good news to overshadow those dramatic increases in inventory. Now, new home listings were down 10.53% in the month of March in 2009 when compared to March of 2008. That was 8 fewer homes listed in the month of March, so that's good news. That gave us a grand total of 68 homes that were listed in Morgan Hill. And as I said, the trend is good on that, so we'll just move right on to sold numbers because this is also some good news for Morgan Hill. Now, look at that dramatic increase between 2008 and 2009. In fact, it is a 93.33% increase in the number of homes sold from March of 2008 to March of 2009. That is great news for our market here in Morgan Hill. That is 14 more homes sold in March of 2009 than were sold in March of 2008. So that's excellent news, and it has really helped to get the ratio back in control. Now, for those of you who might be new to my presentations, the ratio is basically the total number of homes on inventory divided by the total number of homes sold. Now, why is that number important? Well, it gives you two ways of looking at the overall health of the real estate market that we're currently analyzing. You can think of it in one way as how long it would take to sell off every home currently in inventory if sales stayed right where they are. In this case, that would be 8.86. So if we're thinking of it in terms of months to sell off inventory, if the numbers froze where they are right now, it would take about almost 9 months to sell off the entire inventory we currently have in Morgan Hill. Now, that's a dramatic increase from last month in February, which was 14.8 months. So we've seen inventory down enough and sales up enough to really bring those numbers together. Now, another way of thinking of this is how many homes are competing for each sale. So for every home that's sold, there were almost 9 homes on the market. So that is sort of an indicator of competition. While one would tell you how long it would take to sell off the inventory, the other gives sellers an idea of how much competition are they seeing out there in the marketplace. And obviously the market is at least better now for sellers than it was a month ago, or excuse me, last year for sure. Now the county, to compare us to the county in general, we're only a little above the county right now. The county stood in March at 7.19 months worth of inventory. That's actually pretty good. We've been underperforming the average county numbers by quite a bit. So to see us creeping up that close to it is kind of reassuring. We'll move forward with this and see how much more good news Morgan Hill has, because there is a little more. Now, this is the same numbers, the same supply and demand numbers, inventory listed and sold numbers, but now we're going back months. So it goes all the way back to October of 2007. I like to give you more than just a year so that we can try to tell the future a little bit based on old performance and performance from last year on what we might see in the months moving forward. So let's go ahead and again start with the total inventory of homes. And I've also included an average indicator there. That's the little blue line cutting across horizontally to give you an idea of the trend. And as you'll see, it's a very mild trend overall, given the fluctuation we've seen over the last year or more, but it is a trend downward, so that's a good thing, and I think you can kind of see how that trend has been working out. If you go March to March, you can see we're definitely down from the same period last year. If we look at how things led up to March of 2008, you can see we saw a steady increase last year, so January, February, March all showed increases last year. This year, we've kind of bucked the trend. We did see the January, February increase, but we didn't see the March increase in inventory that we saw the same time last year. Now, I think a lot of this has to do with folks coming out and doing a lot of deal taking. A lot of homes have come down in price. We'll be seeing the average home price numbers coming up here quickly, and you'll see exactly how much things have come down since the same time last year. And I think you'll also see that some higher-end markets have seen some activity in Morgan Hill that have also sort of skewed the numbers. But again, we'll talk about those in a little bit. Now, comparing month to month between February and March, inventory is down 3.75%. That's 10 fewer homes on the market than were on the market last month. That's actually unusual. Normally this time of year, we would expect the inventory to go up a little bit. We actually would have expected listed homes to go up a little bit. We'll see that in a second and see how that fit into the equation. But normally we would expect a continuing increase as we ramped up to summer on the inventory number. So this is actually bucking even a normal market trend, and we'll see how that plays out for us in the coming months. Now, this is the total number of homes listed, and as expected, we do see an increase in the number of homes listed between February and March. And again, that's a normal market rhythm type of thing. As we head into the summer months, we tend to see listings increase. Now, it actually increased 13.33% from last month, and that is 8 more homes listed than the same time last month, than we did last month. Now, can we learn anything as far as projecting how listings might go moving forward? Well, let's take a look at last March, and we can see we saw again the reverse trend. We saw a big jump in the February homes listed, and then a drop in March. This time we saw an increase in March, where we had a dip in February. Now, there were some interesting things going on last year. Some really bad news was coming out those first few months of last year. So I think a lot more people were putting their homes on the market, kind of hoping to get out of their properties before things got a whole lot worse. This year, I think we're seeing a little bit more of a normal trend. We would expect to see a bit of a ramp up here in listings as we head into the summer months. Since we've been in this down market has been around for so long now, there's a lot less of the feeling of, well, I really need to jump in now to take whatever cash I can out. Now, does this tell us anything about where we might be going in the coming months as far as listed homes are concerned? Where you can see in April, May, and June, a little bit of fluctuation there. May was a bit of a spike, but relatively flat for listings. My guess would be we're going to see the same thing. And if we go back now to inventory and see what sort of trends we might see, again, not horribly exciting. I would imagine we'll peak out and start to decline as we get a little sell-through in the summer months. We'll see how that pans out, see how strong the summer season is. I have a suspicion the summer season's not going to be as strong as a lot of pundits would love it to be or want it to be or are telling us that it will be. But I definitely don't think it'll be as bad as it was yesterday. I think we'll see encouraging numbers when we look back from June, July to the same time last year in June and July as far as comparing it to this year's numbers. Now let's go ahead and jump forward. Now we got to take a look at the solds. The number of homes sold, again, is dramatically increased from February. It's a 61.11% increase. That's 11 more homes sold in March than in February of 2009. Last year, what did we see between February and March? Again, we saw an increase, but we didn't see the kind of increase that we saw this year. Much more of a dramatic increase. If you'll look back to last year, January to April saw a pretty much a normal ramping. May was a little bit weird, but right up until June, where we peaked out, we saw some pretty good sales numbers ramping up. We're already seeing some good sales numbers now. again, I think given the time of year, I think a lot of people get that a lot of sales are anticipated, or more competition is anticipated in the summer months. So I think we're seeing some people coming out a little bit earlier in the season to buy properties, and that may account for why we're seeing an increase in sales right now. And when we take a look at sort of the breakdown of where that sales action has occurred, we might be able to get a little bit more insight into what's been bringing out the buyers. Now, let's go ahead and look at the short sales and foreclosures number. As some of you know, this is a relatively new bit of statistics we've been putting out, or I've been putting out, and it's really aimed strictly at sort of getting a handle on what percentage of the marketplace is made up by short sales, foreclosures, and conventional sales. Now, as you can see, last month we saw short sales making up 17% of the total number of homes that sold in Morgan Hill. 56% of them were foreclosures last year, and 28% of, last month's sales were conventional. So remember, this is last month, not last year. So we're just looking at month-to-month changes in short sales and foreclosures. If we look at this month, a lot of really good news, frankly. Conventional sales shot through the roof, outnumbering either one of the other two, short sales or foreclosures. Obviously not comprising the majority if you group short sales and foreclosures together, but still very good news, and definitely beats the county average, which also improved in this sort of a way, but not as dramatically as we see here in Morgan Hill. Now, short sales stayed the same from last month at 17%, but foreclosures became a much smaller part of the overall sales numbers, comprising only 38% of the total number of homes that sold, and conventional jumped up to 45%. So that's overall good news. That means folks are out there getting a normal loan from all through normal circumstances, not having to deal with negotiators on short sales or banks on foreclosures, and getting a home purchased. I know in my personal experience, the short sale and foreclosure scene is still a little bit chaotic. Most agents don't know how to do them in a way that works best for everyone. And a lot of banks are shooting themselves in the foot by insisting that negotiators do not get assigned to short sale properties until an offer is in hand. That's counterproductive because banks are not handling those offers quickly enough. I know in my case, one of the last properties I sold where we were dabbling in short sales, there was a wide field of options, obviously, because of the inventory out there. And on a couple of occasions, we did make offers on short sales and just found that the agents involved and the banks involved in those properties were just too slow to reply to offers. And we ended up buying a conventional property. So my anecdotal evidence really backs this up, not just for Morgan Hill, but also for some other communities. Now, let's go ahead and jump in forward and look at home prices for over the past years. Again, this is just the month of March, going back to 1999, and we'll see if we can get a good view of what's been going on. Really no mystery here. This is a pretty clear indicator of how we've been doing. Prices steadily increasing right up until 2006, and then a steady decrease from 2006 to 2009. Now, the average home price between March 2008 and March 2009 dropped 17.27%. That is a loss of $131,020. Now, the average home price was $627,613. And man, I can remember selling houses back in 2006 when we were just a few thousand shy of $1 million being the average home price. So what a big difference just 3 years will make in a marketplace. A house you purchased for $1 million back in 2006, you could purchase a similar property today for $625,000. So that's pretty amazing. Now, the median home price, you'll see, has actually dropped more. And that gives us an idea of where the bulk of the homes that were sold were clustered. So more homes that sold in the month of March in 2009 were selling below the average price of all the homes, and that'll become clear in a moment. We sold off quite a few high-end homes in the month of March, and that we'll be able to. I'll break that down for you. 4 or 5 of the homes that sold in March were over $1 million, so that obviously pushes this average price way up. Now, what's the more realistic average price? Well, I think that the more realistic number is closer to the median. Not right on top of it, but probably about $50,000 off. So we're probably talking a more realistic average price in Morgan Hill of somewhere just below $600,000. Now, the median price change is down 19.55% from the same time last year. That's a $129,000 value drop. Now, the highest priced single-family residential home in Morgan Hill was at 1985 Pear Drive. It sold for $1,499,000. List price was originally $2,099,000. And what's interesting is this is another one of those homes that was relisted during the time period folks were trying to get it sold. So when the statistics get run for this at the end of the month, they're not going to reflect that this property basically took $600,000 off of its price to get sold. When it got relisted, the property asking price was dropped to 1.499. So the reported percentage of asking price that's going to go off to all the pundits across the nation is going to be that this home sold for 100% of its asking price. Now, this home also took 371 days to sell. That is not the highest, but what's interesting is that all of the highest price homes made up the longest on the market homes. So we've definitely seen a big sell-off of high-priced homes that's also managed to affect the days on market. So we'll also go through those numbers here in a bit too. Now, the lowest price single-family residential home in Morgan Hill in March of 2009 was 16963 Leslie Court. That sold for $300,000, which was actually over its asking price of $287,000, and that sold in 7 days. The market is really taking off. I'm seeing much different dynamics right now in the market, starting in late February, early March, where if the home is priced correctly, and in this case, this home absolutely was priced correctly, it's going in a heartbeat. And then 7 days on the market really indicates that. So for folks out there that are looking to invest, whether it's true or not, there are a lot of folks out there pretty much convinced we're at the bottom on prices, and a lot of folks are out there taking advantage of that. Now, the average price per square foot stood at $270.53 in the month of March. That is actually down from February, which stood at $272.18. And a lot of the reason for this to be going down just a little bit is some of these higher priced homes have a lot more square footage, and when you do the square footage calculation, they end up actually selling for quite a discount on the price per square foot calculation. Now, let's go ahead and take a look at the home prices for the past months. And again, we look at these numbers going back, not the same month reflected with each bar back, but just going back chronologically now to October of 2007. Now, these are home prices, and it's pretty clear to see what the trend is here. Definitely down. The average home price again stood at $627,613. The percentage change between February and March was actually an increase of 14.04%. That's a dollar value amount of $77,247. Now, we'll take a look here at the median that'll really inform us really of how we should look at this number. But frankly, this is a slightly bloated number because of the fact that we sold so many high-end homes in the month of March. So this is an artificially increased average. If we look at the median, you'll see that the median compared to last month actually decreased. And I think that we would see a much flatter performance here if the numbers this month weren't skewed so much by some high-end homes. The median price change was down 4.32% from last month. That's a $24,000 drop. And again, the total homes sold was 29. So what does this tell us? Again, it tells us that more homes were selling below the average price than sold above it. And again, it was some of these over $1 million homes that really sort of threw off the average numbers here. Now let's go ahead and take a look at days to sell. This is the cumulative days to sell. I don't like there's two numbers reported by the multiple listing service. One is days to sell and one is cumulative days to sell. I'm not even sure why they bother to put the days to sell up there, but it's really the difference between the real number and a number everyone would love for you to believe. And unfortunately, the market tends to use just the day to sell number, so you often get artificially low days to sell numbers reported by some of the state and national statistic folks. Now, we'll go ahead and take a look at this here, and we'll see that it was 130 days in March to get a home sold. That's actually a little bit artificially high just when we compare it month to month. But boy, it's not, even though it's artificially high this month, look at 2008. We had sort of the same sort of phenomenon going on then where a whole lot of homes that had been on the market for a really long time got sold. But I think, if I'm not mistaken, the real number back then was still just under 200, so it was still very high. But we've definitely got an improvement compared to last year as far as days on market is concerned. Now, the days to sell is down 40.64% according to this particular graph. That's 89 fewer days to get a home sold at the same time last year. Now, the lowest days on market for March of 2009 was 6 days. One home sold in 6 days. The longest days on market was 574, and that just happened to be the second most expensive home to sell in Morgan Hill. The top most was 300 and something. We reported that on a previous slide. But the top, with only one exception, all the homes that were over $1 million occupied the top spaces as far as how many days it took them to get sold. Now, to sort of break down where the most activity was in the month of March, let me give you an idea of how many, in different time segments, how long it took for various homes to get sold. Now, 2 homes sold in 7 days, 6 homes sold in 8 to 30 days, 3 homes sold in 31 to 60 days, 1 home sold in 61 to 90 days, 10 homes sold in 91 to 180 days, and 7 homes sold in over 180 days. So you can see there's a pretty good clustering of properties up at the 90-plus day mark. Only 26% of the homes that sold in less than 30 days. So how does this inform us as far as if you have an average home in Morgan Hill, what are the realistic numbers you should be looking at? Well, I think that 130 is probably a little bit high for you, but I would say that somewhere in the neighborhood of 90 to 100 days is a realistic expectation on the part of folks who are out there considering listing their home this season. Now let's go ahead and take a look at these same numbers just for past months now. As you can see, we've got 130 days all the way to the right there from March. And from from February to March, we had an increase of 51.16%. That's 44 more days to get a home sold. And again, this is a little bit skewed by the fact that we sold some pretty pricey homes that had been on the market forever, in a lot of cases well over a year. So as I've mentioned before, whenever sales go up, you'll tend to see an uptick in days on market, simply because when you're selling more homes than usual, you're usually selling off properties that have been on the market for longer than most, because we're selling them off. In a normal market where you have sort of a much more stable inventory that stays at a sort of a median level, where there's usually only 3 to 4 homes that are selling, only 1 home that's selling for every 3 or 4 instead of the situation we're in now, that tends to balance out, and these numbers are much more reliable. Since we have so many homes in the inventory, with so many homes that have been on the market for so long, when we do see an increase in the average number of homes that sell, and we see a sell-off on some of these properties that have been on the market forever, you'll see an increase in this here. So that's how you can sort of balance out in your mind why we're seeing an increase in sales, but we're seeing a corresponding increase in average sales price. Now, I do appreciate y'all taking the time to listen to these presentations. I try to give you the best information possible so you can make a great decision on your real estate needs. If you'd like to read any of my other articles on real estate, or listen to any of my podcasts, or watch any of my other video presentations, you can find those on my website at www.soldbyrobert.com. You can also get in contact with me via email at robert@soldbyrobert.com, phone number 408-852-0525. If you'd like to use AOL Instant Messenger, Google Talk, or Yahoo IM, just use the screen name The Rebel Broker. Skype, I can be found at Rebel Broker. And, of course, referrals are always appreciated. Get in touch if you or anyone you know is interested in real estate in the Silicon Valley area. And, of course, contact me for referrals anywhere in the United States. I'll go through all the trouble to find the right person for you and help you achieve your real estate goals. Thanks again, and I will talk to you all next time.